The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at the midweek market action, grains, wheat tried to bounce, kind of faded though through the session Wednesday. Corn, soybeans also finishing with slight losses for the most part across the board. Did have a little strength of bean oil though, one bright spot, and a really good day in cattle and hogs on Wednesday. There's a lot going on, though. We got weather stories to talk about around the world. We, of course, have the end of the month, end of the quarter, USDA reports coming up on Friday. There's a lot going on, plenty of moving parts. Let's talk about it. Joining us for market analysis today, Mike Zuzolo with Global Commodity Analytics. Mike, good to talk with you again. Thanks for being with us here this week. We had a week off with the Juneteenth holiday, and here we are almost to the end of the month of June, and as I alluded to, Mike, no shortage of stories out there, whether they're having an impact on the market or not. There's still plenty to talk about right now, isn't there?
Yeah, and we didn't get any kind of relief whatsoever in terms of rally or shift in market mindset, and we broke through shortly after that split up of the midweek holiday week last week. We broke through some pretty key technical support levels and some of the big grain and commodity indices that I track, Jesse. And so, yes, it's been about weather. And yes, I think, as I stated last week, if we would have stayed dry in the central and eastern corn belt, I think we would have had a much different price action for the corn and beans, especially. I'm not so sure for the wheat, but for the corn and beans, I think we would have had a much different price action. But I don't know how much we could have gotten in terms of upside potential if it would have stayed hot and dry, just because of some of the chart technicals that we did, take out in terms of last week on a weekly closing basis. And so we were really geared up for a weaker price action if those rains really did fall. I think, though, we need to kind of take a trip around the world when it comes to the weather and the Northern Hemisphere weather in particular before we kind of write the final chapter in the 2024 corn and bean supply-demand fundamentals.
Well, let's do just that. Let's take a look at a couple maps here. Let's start with the drought intensity map that you shared with us. And I mean, walk us through this piece of the puzzle first before we take a look at soil moisture. But I mean, obviously, we got challenges in certain places, and then we've gotten excessive rains in other places as of late. So, I mean, talk about this a little bit, Mike.
Well, the key with this year is it's a really interesting dynamic, because while we've got terrible flooding and in some cases the Iowa, Minnesota border area of some prime farm real estate has seen 800+% of their normal precipitation over the last 10 days. And we've got a mini 1993 going on right now that could become a bigger issue if the rains continue to fall and we see a swelling of the overall Mississippi and Ohio River valleys. So that's one area that the trade is really ignoring right now, in my opinion. But the bigger issue is when I started looking at around the world in the Northern Hemisphere, about 2-3 weeks ago, I started to notice that there was an issue, not just in the U.S. Corn Belt, but also, and we knew this in the April-May rally, of the Black Sea area of Russia's freeze and very dry weather coming into spring. That hasn't gone away. And that really shows us in this map, in this drought intensity map, Jesse, that we've got still a very big issue going on in the Black Sea region, the corn belt of Ukraine, the wheat belt and the corn belt of Russia in terms of southern and central Russia. Some of the soil profiles that we're looking at right now in Russia, for instance, the moisture is at the lowest in 7 years. And so we really don't have any kind of move out of this situation. And it's not just in the Black Sea region that we've seen this very big drought area for the row crop show up.
I know as well, flipping maps here, soil moisture map. You talk about other areas. I know we got other areas, I think in China as well. And just when we break this down and really examine this, Mike, there's plenty of weather story out there right now.
Well, there really is. And what we're going to try and do during today's conversation is kind of pull together all the dots and draw some lines, hopefully. But this map right here that shows the soil moisture at 0 to 10 centimeters is integrating the recent rains. It would not have integrated the Wednesday midday and late afternoon rains that I think really created another sinking of the market. And so we can call Wednesday's trade overall, I think, a dead cat bounce with a little bit of life starting to show up in the wheat market, and that wheat market maybe is trying to carve out a seasonal low at this stage of the game, a harvest low at this stage of the game. But this map right here, it shows a different situation where the U.S. Central Corn Belt and Eastern Corn Belt are getting some relief at the 0 to 10 centimeter depth level for soil moisture, but Central China is not. And what's nice about this, if you're a client or a subscriber, I can push these maps, both of those maps that we're looking at, I can push these out 5 days and look at what the forecast is using these maps for, say, July 4th, and whether it gets better or worse. And I can tell you, the United States, when it comes to Indiana and Ohio, 5 days from now, this map will look a lot browner at this stage 5 days from now if the weather models are correct. And so I would say the key with these maps at this point really goes back to how comfortable do the funds feel being so net short? How comfortable do the commercials feel being so short bought in the cash market? And while they won the first round here this week in the United States, we've still got some real global issues. And so we really got to look in the other parts of the world, I think, before we can really start talking about a low in this market, if we're talking about corn and oil seeds. And remember, Ukraine is a big deal when it comes to oil seeds, as is Canada.
When I think about this too, Mike, and with the issues, Black Sea, China, you name it, we've obviously earlier in the year we talked about the flooding in Rio Grande do Sul in Brazil, things like that. And then, as you mentioned, kind of a mini 93 event going on in the Northwest Corn Belt, the dryness in the East. To me, it just feels like some of this algo computer type trading largely is just not paying attention to this. They're more so, to your last point there, it's a lot of funds kind of controlling things back and forth and managing that money, and computers trading that versus any of this weather story, it feels like right now. And it's a bit of a head scratcher for me.
No, and I agree with you. And I think the common denominator for both of those is the demand side, Jesse. I think we're not adding to the supply. We've saved the supply in a lot of cases in this past week's rains in the United States. And China is supposed to get a little bit of rain in central China in the next 5 days. But the key with the funds has always been about the demand. And it's been, almost 2 years that we've talked about this. And what more specifically is going on with the demand is the fact that the U.S. and China trade relationship, the sanctions that the United States and Europe is putting on both Russia and China, it's pushing those two countries' currencies lower. So we're getting pummeled when it comes to Russia and the wheat and the Russian ruble. We're getting pummeled when it comes to the soybeans and the Brazilian currency following the Chinese currency lower. That part of the story has not changed. We are still riding near a 2-3 month high in the US dollar index. We're still riding near a 7, 8, 9 month low, depending on which currency you look at in many of these emerging market currencies. And these sanctions do one big thing. They create an environment where the financial markets want to buy the dollar as a safe haven. And that in turn creates even more of a headwind when it comes to the funds and the investment flows, thinking that we're going to pick up agriculture demand, not just agricultural demand for the United States, but overall agricultural demand. And I can say that there's some new information out, some new papers out that are really good papers that kind of attach the linkage of true trade sanctions with agriculture trade. And some of these research papers are coming up with the idea that trade sanctions, like what we're doing right now, they could hurt the overall agricultural trade in volume terms by as much as 10% when they run it through their models. That's a big amount. And I think the funds are very well aware of that. And that's what's going on for the most part.
And probably too some positioning as well this week. I mean, end of quarter, end of fiscal year, USDA reports coming up as well. So I think that's maybe adding to some of what we're seeing as well, isn't it, Mike?
Yeah, that they're pushing it hard. They're gonna push it as hard as they can because they got the momentum on their side and they've got supply reports coming out and they don't think those supply reports are going to be bullish. And what I would say, I'd flip that over and I'd say at these price levels with new 2024 lows in both D's corn and Nove beans, if you're talking acreage, I think you got to be at the top end or higher on corn and bean acres to feed the bear at this stage of the game, especially with Wednesday's gains that we had earlier in the session completely eroded. So I think they're pushing as hard as they possibly can going into Friday's close. And that had me on the phone a lot today with producer clients and my analysis suggesting if we don't get a bearish report out of the USDA, let's wait until the next WASDE report to see if we tighten up the South American corn and see what the weather looks like. So that's only 10, 11 days from now. That to me is where I'm going to really focus on the rest of my 23 corn that I have left to sell. And if it's on farm storage, I don't have to worry about it. But if it's commercial, you're going to have to make a tough decision whether you roll it and take a hit or whether you go ahead and let it go and then buy it back on paper. So that's something you have to look at on an individual basis.
Mike Zuzolo with Global Commodity Analytics is our guest analyst here today on Market Talk. Let's look at the Bloomberg Commodity Index. This is something you and I look at quite frequently. And as we just look across this grain trade as a whole, and you mentioned some of the fundamental moves and the chart damage and things like that we have done here as of late. So what's the latest you're looking at in terms of the Bloomberg Index right now, Mike?
Yeah, this is the chart that I was talking about earlier, and one of several. But we're not going to go through all of them, obviously. But this is a monthly chart, and when we closed out the month of May, we were able to stay well above the support levels, those old lows around 34.50, and we had just bounced off that 40 level, and so we were coming into June thinking, okay, could we go ahead and pound through the 40 level and get up to that major 24-month moving average of around 43? And what I do with these charts, these index charts, is I look at percentages. So 43 divided by 40, what kind of a percentage could we be looking at theoretically for a rally in corn, beans, and wheat? Instead, what we saw about a week, 2 weeks ago, and it really got serious last week, was we took out those major support levels from earlier this year around that 34.50 level. So now we're once again, Jesse, dancing on the lowest level since December of 2020. And we're coming back down to meet the wedge point. So I think this is a very critical time period where, as I said, the next 10 days, as we finish out the month of June, I want to be back up above that red support line, which used to be support up around 36.0. If we can get that, that should stimulate what I would call a buy signal in the grains. And that's probably what I'll use as far as whether I recommend buying back any kind of old crop sales that have been made during this next week, week and a half time period.
Wheat mentioned tried to bounce on the day Wednesday. Let's take a look at the SRW monthly chart. And you mentioned maybe trying to carve something out here in this wheat trade. We've talked a lot about wheat needing to be the leader here. What's your perspective on this wheat trade right now as we near the end of the month?
In my perspective, is this chart clearly shows the trade is not worried about 10-year lows and stocks to use ratios globally, and they could care less about the USDA's jump of 50 cents a bushel in the U.S. average price this past month to 6.50 a bushel. And so I really am putting a lot of weight, an increasing amount of weight, on this orange trend line here, drawn off the 2016 lows. The timing of this retest of this trend line being the rapid pace of harvest. Yes, the yields are extremely good for the most part. Soft red wheat and hard red wheat looking very good yields for the most part this year. But I think it goes back to where are we globally? And so I hate to do this again to the producers, but I really do think wheat is back in terms of pole position, in terms of leading this market out of the hole. And if we take this trend line support out, we're going to have to do some complex or really tough discussions and analysis as far as how we handle the corn and beans that we have left to sell. So this trend line is very important to me.
Well, let's segue over to livestock trade, and we'll come back and wrap everything up at the end. Cattle and hogs had a really good day on Wednesday on futures. Feeders, of course, remain strong. Corn moving a little bit lower, no doubt helped as well. Walk us through this feeder corn chart that you got here for us today on the video feed. I mean, what is What can we take away from this good day that we had on the day Wednesday?
Yeah, a lot of people are talking right now about the feeder cattle in the cash market remaining at 260, a solid 260 for those seven light 8 weight steers. And I agree with that. That is a supportive feature to this market. But I think the real reason, and this is the key to the feeder cattle market to me, Jesse, is the real reason the market was able to disregard and completely overlook that very bearish price negative placements number of over 104%, which took us to an on feed number very close to where we were last year at this time. The reason we didn't dial that in after the cattle on feed report about a week ago, I think, is almost completely because of what we're looking at here. The corn broke hard. The funds got charged up and bought feeders against corn, and now they're pushing it to the old highs, those old 2023 highs that we had late in the year, which take us all the way back to the 2015 highs. So I am in the red zone for getting hedges in place, starting with feeders. I'd love to see September feeders get to around 264 to 266. That's when I'll start, I think, recommending getting some puts laid in. And like the soybeans, a key with these markets right now where you can be profitable and hedge, in my opinion, is so what if the market keeps going higher between now and September in feeders, or now in November in soybeans? Just keep moving those puts up. Yes, it's an extra trade. Yes, it's an extra commission, but it also can improve your floor price and your profitability pretty dramatically if you get a couple good moves. And so this is the place where I think we want to start getting the feeder hedges in place and follow that with fat cattle hedges as we get closer to that July 4th holiday.
When you talk about fat cattle hedges, let's look at the August live cattle chart, and a good day there. Actually, live cattle fats kind of helped lead the cattle complex as a whole on the board on Wednesday. August is getting that 186.75 mark on the close Wednesday. I mean, talk about what you're seeing right now in live cattle.
Yeah, I love this chart because it matches up with the fundamentals so nicely. That negotiated cash price was able to hold very nicely, and that allowed us to break above that consolidation and that high period from back in the March. And now we've got some momentum underneath us, and I think we can maybe move towards that 189, 190 level, which gets us back to the levels since not seen since last September. That's the level I'm really looking at. And especially given the fact that the August contract does have that breakaway gap in it all the way back down around 180. I'm not saying August cattle are going to go back there, but sometimes the funds like to look at those gaps before the expiration of a contract. So I'm really eager to lock in the August fat cattle and go all the way out to maybe October, obviously, but maybe even November, and maybe even all the way out to April of 25, depending on what that futures curve looks like once we, or if we can get to that August 188, 190 level.
We had a cold storage report as well Tuesday. Any notes there that might have been supportive of this overall protein sector? I know hogs had a good day Wednesday, which has been few and far between as of late. Your thoughts on the cold storage numbers, Mike?
No, I think that was a really good point you make. Is the hogs finally came around for us, and we've got the cold storage numbers out. We're still tight on supplies, it looks like, for the most part, and we've got China's hog market taking a nice move to the upside, cooling it a little bit now. But we've got what looks to me to be a low in this hog market because of the supply side fundamentals. Now the question is, where's the demand at? And I think that's where it goes back to the BLT seasonal, that bacon, lettuce, tomato seasonal, as I call it, because I really think oftentimes in the midsummer when tomatoes come on, the restaurants do the bacon cheeseburgers, and then the grocery stores really feature bacon. And that belly cutout can really impact the pork cutout overall because the belly cutout really can move very sharply higher when you have a good bacon seasonal. So I think we're entering that time period right now, Jesse. And so I'd be looking for the August hogs. In fact, on Wednesday had an outside day higher close. They could be stimulating a buy signal by the end of this week, depending on what that hogs and pigs number looks like here on Friday.
I was going to say that hogs and pigs report coming up here yet this week. Some more fodder for that trade for sure. Let's put a bow on this here today, Mike. Great stuff as always. I know, kind of alluding to a couple of things we both said. A lot of tough conversations, I think, are going on, are going to have to be had when it comes to marketing right now, just with this environment. A lot of volatility in front of us. So, what would you remind folks? What do they need to think about here into the end of the month?
I think the key for me, Jesse, and why I started out and we talked about this weather today is because we got to understand, why is the European wheat a buck premium to the U.S. futures? Why is the Paris corn futures almost $1.50 premium to the U.S. futures? That has been in a premium situation. And also, why is July beans almost 65 cents premium to the November at this point, if we've got such a big crop being grown? And all this comes to a head with July futures delivery here on Friday, along with all these reports. And so I really think the weather is picking up on good demand in the world and also a tighter supply, whereas the U.S. market, I think, is more strangled, as you talked about, being strangled by the funds and looking at different fundamentals at the mercantile exchange.
Mike, if folks want to reach out to you and have a conversation, take a look at some of your research and analysis and much more, how can they get in touch with you?
Yeah, great time to do it with all these reports. Get a 2-week free trial on the website, globalcomresearch.com, and it's globalcom with 2 M's. Take a look at the product services on a PDF file. Also, there's a toll-free number if you want to talk to me directly about your personal issues.
globalcomresearch.com. With that, Mike Zuzolo, Global Commodity Analytics. Always good to catch up with you, sir. Thanks for joining us this week.
And I meant personal farm issues, not personal issues, Jesse.
You're the Dr. Phil of marketing, though, right, Mike?
Thank you, sir.
You bet. Mike Zuzolo, Global Commodity Analytics, joining us here today on Market Talk. We're out of time. Thanks for joining us. I'm Jesse Allen. Have a great rest of your day.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.